Tuesday, October 21, 2025.
Welcome to the News El Salvador SV podcast, a space for conversation and reflection where we explore together current topics from El Salvador and the world.
You can contribute your financial support via PayPal or via Bitcoin QR code. You will find the PayPal link in the content description and the Bitcoin QR code on the cover of this episode.
When you send a payment, please include in the subject line the reason for the payment, something like collaboration, I like the topics you discuss, for a coffee, contribution for your podcast. This is for internal control purposes.
Also, remember you can advertise through this space. If you're interested, the email address is in the description. Write to us. We will be very happy to hear from you.
Look for US on your favorite platform, on Spotify, Pandora, Apple Podcasts. We are on almost all of them as Noticias El Salvador SV.
Okay, let's unpack this. Today's deep dive is really a snapshot, isn't it? Just one day, Tuesday, October 21st, 2025. But wow, what a day. It felt like, I don't know, things really shifted, geopolitics getting tense, markets doing some, well, pretty wild things.
Absolutely. Our mission today is to take all these different threads from that single day. You've got presidents trading barbs, you've got legal bombshells in Europe, infrastructure problems, and this massive, surprising shakeup in the crypto market, and try to weave them together for you. See what really matters.
Yeah, connect the dots, basically. See how maybe political moves are rippling through finance, or how tech failures challenge the whole decentralization idea.
Exactly. We're trying to link that sort of chaos of centralization in politics with what's happening in finance, both traditional and decentralized.
Okay, so quite a bit to get through. Let's jump straight into the international scene.
Yeah.
We have to start, I think, with this pretty sharp exchange, this diplomatic spat, really, coming out of South America.
Yeah, we really do. It's the latest round between Colombia's President Gustavo Petro and the United States President Donald Trump. And, you know, this isn't just words. It feels like it has real economic undercurrents.
Right. So the background is President Trump had apparently criticized Petro, calling him, well, the worst president Colombia's had, and saying the country was out of control. But Petro's comeback, it was something else. He didn't just push back. He sort of embraced the phrase.
He did. He totally leaned into it. He basically said, estamos fuera de control, es cierto y libres, which translates to, we are out of control, it's true and free. He used Trump's own insult as a declaration of independence, almost.
That's a heck of a rhetorical move, isn't it? Turning out of control into a positive, into freedom. And he then argued that the only real control should be from the Colombian people themselves, not, as he put it, from foreigners who hate migrants. It shifts the whole narrative.
Completely, from competence to sovereignty. And he backed this up with a pretty concrete economic point. He mentioned the free trade agreement with the United States.
Yeah.
He said it's effectively suspended de facto.
Suspended by whom?
Well, Petro places the blame squarely on Washington. He argues it's because of unilateral tariffs the United States imposed under President Trump. And here's the kicker. He claims this situation has actually liberated Colombia from commercial submission.
Wow. So he's not framing the trade friction as a problem, but as liberation. That's a bold stance. It suggests sovereignty is maybe becoming more important than the existing economic ties with the U.S., for him at least.
It definitely signals a shift, or at least a desire for one. And it ties into his broader comments about regional leadership. He specifically said that neither he nor Brazil's president, Luiz Inácio Lula da Silva, have knelt before the United States.
Oof, that's direct.
Very. He was criticizing what he sees as Washington preferring leaders who show, quote, due obedience. It's pushing back against that perceived, big brother attitude in the Americas.
It feels like it connects to everything else going on, the bigger rivalries, maybe a growing push for alternatives to U.S.-led systems in the region. He even brought up past stuff, like Trump apparently threatening to invade Brazil once.
Yeah, and criticisms about the border wall. Petro framed it all as showing contempt for Latin America. So this whole exchange just adds another layer of, volatility to the global economic picture.
Okay, so from that diplomatic heat, let's pivot over to Europe, because on the same day, October 21st, there were some major shocks there too, legally and physically, with infrastructure.
Absolutely. The biggest international legal news has got to be about the former French president, Nicolas Sarkozy. The reports confirmed it. El expresidente francés, Nicolas Sarkozy, llega a la cárcel de París para comenzar a cumplir su condena de 5 años. He arrived at prison in Paris to start his 5-year sentence.
That is just stunning. A former president of a major country like France actually going to jail. He got 8 years total, right? with 5 to serve, for a listed association tied to his 2007 campaign financing.
Correct. And the alleged source of the funds is the really explosive part, Muammar Gaddafi's Libyan government.
From Libya.
Yeah. So this isn't just some minor campaign finance issue. It's potentially linking a former head of state's election campaign to money from, well, a dictator in a country that wasn't exactly friendly. The implications for national security, political integrity, they're huge.
It definitely sets a precedent for accountability, doesn't it? But while that legal drama was unfolding, things were literally exploding elsewhere in Central Europe.
Yeah, talk about timing. We had 2 major incidents in the energy sector, seemingly hitting almost back to back. First, there was an emergency, a fire, multiple explosions at the Hungarian oil company MOL's refinery. That's in Százhalombatta, just south of Budapest.
Okay, one refinery fire. That happens, right?
But just hours before that, there was a similar explosion reported at the Lukoil refinery over in Ploiești, Romania.
2 major refineries, Hungary and Romania, hit with explosions on the same day. That feels less like a coincidence.
It immediately makes you wonder, doesn't it? Coordinated attack. Sabotage. Or just, extreme bad luck pointing to some kind of systemic weakness in the energy infrastructure across that region. Even if it's accidental, having 2 hits like that, especially heading towards winter, it really tests Europe's energy security.
Definitely raises alarm bells. Okay, let's widen the lens again now to the big global power dynamics, specifically the United States and China. We had President Trump making some pretty assertive claims during a meeting with Australia's Prime Minister, Anthony Albanese.
He did. He talked about military strength, telling the press, "Tenemos armas que mucha gente ni siquiera conoce. Las puse en marcha hace 4 años, reconstruí el ejército hace 4 años." Essentially, we have weapons many people don't even know about. I put them in motion 4 years ago. I rebuilt the army 4 years ago. He was doubling down on the idea that the U.S. military is way ahead, specifically claiming they are very far ahead of China in the military industry.
Okay, strong military talk. And he also weighed in on the war in Ukraine.
Yes, quite bluntly. He stated, "No creo que Ucrania gana Russia." I don't think Ukraine will beat Russia. That's a pretty direct assessment, cutting against maybe some of the more optimistic narratives.
So, military posturing on one hand, but how does that square with the economic race, particularly in energy? There seems to be a real split there, this green divide between the U.S. and China.
That's a crucial contrast, because while the U.S. president is talking up traditional military power, the economic numbers show a different kind of race emerging. The U.S. is still huge in fossil fuel exports, right?
Yeah, the traditional stuff.
But China is just dominating the new energy tech exports. Look at the 2024 figures. The U.S. exported about $150 billion in fossil fuels. China, they exported $180 billion in green tech, solar panels, batteries, electric vehicles.
So China actually exported more value in green tech than the U.S. did in fossil fuels in 2024.
Correct, and the trend seems to be accelerating. For 2025 up to July, the U.S. hit $80 billion in fossil fuels. China, in the same period, reached $120 billion in clean technology exports.
Wow, that gap is widening fast.
It's a strategic divergence, really. China seems to be playing the long game, positioning itself to dominate the future energy infrastructure, the stuff the whole world will eventually need as it transitions away from fossil fuels. If they control that supply chain, that gives them enormous leverage down the line.
So while the U.S. is maybe focused on current fossil fuel revenues and traditional military strength,
China is building dominance in the next generation of energy. It makes you wonder about those claims of being very far ahead. Ahead in what exactly? The economic battlefield looks quite different.
Okay, let's bring the focus back home to the United States now. We saw some really significant domestic incidents reported on October 21st as well, particularly around security and, well, how interventions happen. Let's start with one that thankfully didn't end in tragedy at Atlanta's airport.
Yeah, this was a really close call. The arrest of Billy Joe Cagle, a 49-year-old Georgia resident at Hartsfield-Jackson Atlanta International Airport. He was apparently live streaming on social media, making threats of a mass shooting.
Scary stuff. But the crucial part here is how he was stopped, right?
Exactly. It wasn't just random police work. His own family members saw the broadcast, realized the danger, and immediately called the police. That quick thinking, that intervention from the family was key.
So the police were alerted? And they found him.
They did. They located him deambulando por la Terminal Sur, just wandering around the South Terminal, and arrested him without any incident.
And they found weapons.
Yes, they found an AR-15 semi-automatic rifle and 27 rounds of ammunition in his vehicle. And it turns out he was already legally prohibited from owning firearms because of past criminal records.
Which raises other questions. But the main takeaway here seems to be the positive intervention. The family saw something, said something, and it worked.
Absolutely. Both the Atlanta police chief and Mayor Andre Dickens praised the family, saying their actions prevented a potential tragedy of great proportions. It's a powerful example of how community or family vigilance can sometimes preempt violence.
But then, almost as a counterpoint, we have this other incident from Texas, which highlights a much more tragic outcome when authorities intervene, particularly involving mental health.
Right. This happened back on December 31st, 2024 in Haltom City, but the images apparently just got published around October 21st, bringing it back into the spotlight. An officer was attacked by a man with a knife on Twin Oaks Drive, got injuries to his head and hand.
Okay, so an officer was assaulted. What happened next?
Other officers responded, and the suspect was fatally shot.
And the controversy stems from
The suspect's family, they claim they were the ones who called the police in the first place, specifically because he was having a severe mental health crisis. They're questioning the police response, basically asking why it escalated to a fatal shooting instead of, de-escalation or mental health support.
So it's a stark contrast. In Atlanta, a family call prevents a tragedy. In Texas, a family call for help during a crisis ends in a death. It really puts a spotlight on that difficult intersection of law enforcement and mental health crises in the U.S., doesn't it?
It absolutely does. It raises those tough questions about training, resources, whether police are always the right first responders for someone in a mental health emergency. The outcomes in these two cases, reported on the same day, are just worlds apart.
Okay, shifting gears slightly from immediate security to more symbolic construction. There's actual physical work happening at the White House.
Yes, literally changing the building. They've started demolition work on part of the facade in Washington, D.C. It's to make way for the Ansiado Salón de Baile del Presidente de Estados Unidos, Donald Trump, the long-awaited ballroom for President Donald Trump.
A presidential ballroom? Well, that's certainly a statement. Starting demolition.
Yeah.
It's a very visible sign of, priorities and legacy building right there on the White House grounds.
It definitely leaves a physical mark, doesn't it?
Okay, and before we dive headfirst into the markets, we need to quickly touch on a natural threat building in the Caribbean. Tropical storm, Melissa.
Right. Definitely something to watch. As of October 21st, Melissa had sustained winds of 85 kilometers per hour, and it looked like it was strengthening. Hurricane watches were already up for parts of Haiti, and tropical storm watches for Jamaica and the Dominican Republic.
So a serious potential threat to the region.
Very much so. The main concerns are heavy rains, flash floods, and especially landslides in the mountainous areas of Haiti and the DR over the coming weekend. The potential for disruption and, sadly, human cost is significant.
And authorities are taking it seriously.
Oh, yes. In the Dominican Republic, the Center for Emergency Operations put 13 provinces on yellow alert. That includes major areas like Santo Domingo, La Romana, San Juan, plus the National District. Another 9 provinces were on green alert. They're urging people to be cautious near rivers and keep boats stocked. Widespread preparation is underway.
All right, let's make the jump now. From the storms and the political tensions to the financial markets. Because this, as you said earlier, is where October 21st got really, really interesting. All that global uncertainty we just talked about.
Yeah.
It didn't exactly send investors running for the usual safe havens.
Not at all. In fact, we saw this huge kind of counterintuitive bounce in crypto and a really dramatic split from precious metals. Bitcoin specifically just exploded upwards.
What kind of numbers are we talking?
Well, it surged past $113,000 quite decisively. During the day, it hit a peak of $113,800, and by the time of the latest updates that day, it had even touched $114,088.
Wow, okay. That's a significant move for one day, especially given the general move. Was it just Bitcoin?
No, Ethereum, ETH, was right there with it. It climbed back above $4,090, also posting gains around 2% or more, depending on the source. So it felt like a broader crypto recovery, not just a BTC-specific thing.
But the really big story, the nugget, as you called it, was how this compared to gold, right? The gold BTC flip.
Exactly. The source material really emphasized this. The crypto recovery contrastó fuertemente con el comportamiento de los metales preciosos. It stood in sharp contrast to precious metals.
So while Bitcoin and Ether were climbing,
Gold and silver got hammered. Gold dropped a stunning 5% down to $4,130. The analysis called it the largest daily decline in years. Silver fell even harder, nearly 8%.
5% drop in gold on a day like that, that's huge. Usually gold is where money flows during geopolitical stress.
Yeah.
This feels like a major decoupling.
It really does. It suggests something unusual is happening. Maybe severe stress in the traditional system forcing liquidations, or maybe just a fundamental loss of confidence in gold as the safe haven right now.
What were the analysts saying? How did they explain this?
Well, James Stanley over at Forex.com had an interesting take. He suggested gold might be forming what's called a double ceiling, or double techo in Spanish technical terms.
Okay, a double ceiling. What does that mean for, the average person watching this?
Basically, it's a bearish signal. It means the price tried to break above a certain high level twice, failed both times, and now risks falling sharply if it breaks below the low point between those two peaks. Stanley's point was, if gold confirms this pattern and falls further, maybe below $4,000, the money leaving gold could flow directly into what he called riskier assets, like Bitcoin.
So gold's potential weakness could actually be Bitcoin's game.
That was the theory gaining traction. You had Quinn Thompson from Lecker Capital saying BTC looked positioned to maybe capture gold's lost momentum. And Charlie Morris from Bytree argued that Bitcoin's real moment comes precisely when gold falters or consolidates like this.
Okay, so a potential major shift in market psychology. And this sudden surge in crypto must have caught some traders off guard.
Oh, absolutely, especially the ones betting against it. The derivatives market saw absolute chaos. This unexpected jump just crushed the short sellers. Liquidations of short positions hit $280 million in just 24 hours.
$280 million.
Yeah.
Wiped out, just like that.
Just like that. And as the price pushed past $114,000 towards the end of the day, another wave hit over $260 million in leveraged shorts, liquidated in just the last 4 hours of that rally. It was a massive short squeeze.
Explain that, a short squeeze.
It's when the price starts rising unexpectedly fast. People who bet the price would fall, the short sellers, start losing money rapidly. To limit their losses, they're forced to buy back the asset, which pushes the price up even further, trapping more short sellers. It creates this kind of upward spiral fueled by forced buying.
Right, a feedback loop. But what's really fascinating, or maybe ironic, is that this huge price jump happened despite some pretty negative signals from the big institutional players, didn't it? The Bitcoin ETFs.
Exactly. That's the paradox here. The Bitcoin ETFs, which everyone thought were driving the market earlier in the year, actually recorded their biggest weekly outflow ever. Just the week before, $1.23 billion flowed out.
$1 billion out. And on Monday, October 21st itself,
the outflows continued. Another $40.47 million net outflow on that Monday. So this huge price surge, driven by derivatives and the short squeeze, happened even as the main regulated institutional vehicles were seeing money leave.
So what does that tell us? Retail traders just overwhelmed the institutions. Or maybe big players buying outside the ETFs.
It raises big questions about who's really driving the price in the short term. It suggests that derivatives, leverage, maybe large over-the-counter deals are having a much bigger impact than the daily ETF flow data might suggest. It definitely challenges the idea that ETFs are the only game in town for understanding Bitcoin's price.
Okay, hold that thought on market structure. Because there was another event on Monday that perfectly highlights the contradictions within crypto itself. The big AWS outage.
Oh, yeah. The Amazon Web Services problem. This was huge. It knocked major crypto platforms offline for hours. Coinbase, Robinhood. Users couldn't log in, couldn't trade, couldn't buy or sell. Globally.
And the irony here is just palpable, isn't it? All these companies build on the idea of decentralization, freedom from single points of failure.
And they all go down because one single, massive, centralized cloud provider, AWS, has a problem. The user reaction was fierce, as you can imagine. It laid bare that tendency.
There was a quote from an engineer, Sam Mason-DeCaires from Syndicate.
Yes, he put it really well. He said the AWS outage wasn't just a one-off, but it's una consecuencia de cómo está construido el Internet moderno. It's a consequence of how the modern internet is built.
You talk about concentrating control.
Exactly. He said, roughly translated, we've concentrated control in a handful of centralized coordination layers that determine how data moves, how apps run, and ultimately whether they stay online. That's the crux of it. You can have a decentralized ledger, but if your doorway to that ledger runs on AWS, you're still vulnerable to central failure.
So what are the platforms saying? Coinbase, AWS?
Well, Coinbase said they're actively working on reorganizing services to try and prevent this. Again, maybe diversifying cloud providers, maybe looking at other options. AWS basically said they fixed the internal issue, it was completely mitigated, but, the hit to confidence in the operational reliability of these crypto platforms, the damage was done.
It really ties back to that theme of control we started with, doesn't it? Petro fighting for political liberation from perceived U.S. control, while the liberated world of crypto finds itself tripped up by its reliance on a single U.S. tech giant.
It's a fascinating tension, and maybe a good place to just pause for a second.
Good idea.
We just wanted to quickly remind you, our listener, about how you can support what we do here on this deep dive.
Yeah, if you're finding this breakdown useful, connecting the global dots, getting to the market details, you can chip in financially through PayPal or with Bitcoin.
The PayPal link is right there in the description of this deep dive, and you'll see the Bitcoin QR code on the cover image.
And if you do send something, just pop a quick note in the subject, like collaboration, coffee money, podcast support, whatever works, just helps us keep track.
Also, don't forget, this space is available if you want to advertise your product or service. If you think our audience is right for you, the email address is in the description. Getting support through contributions or advertising really does help us keep doing these deep dives with the quality you expect.
Okay, thanks for that. Let's get back into the market details now. All right, so amidst all that volatility and the AWS chaos, we also saw some moves from the big corporate players, specifically Strategy, Michael Saylor's company. Still buying Bitcoin, but maybe a bit more cautiously.
Yeah, the pace has definitely slowed down. Last week, they recorded their third smallest Bitcoin purchase of 2025, just 168 BTC.
Okay, 168 BTC is still a lot of Bitcoin. How much did that cost them?
About $18.8 million, and their average price paid was around $112,000 per BTC, so they were buying right in that choppy, high-price zone we were just talking about.
And where does that leave their total stash now?
It pushes their total holdings up to roughly 640,400 Bitcoin, which at recent prices was valued around $71 billion. So Saylor's long-term conviction seems unchanged, but how they're funding the purchases has shifted.
Right. They usually issue stock, don't they, to leverage their share price premium.
Exactly. But this month, October 2025, they apparently hadn't issued any ordinary shares. Instead, they were using income from their preferred shares to fund the buying.
And that means less buying power.
Significantly less, it seems. They only bought 387 BTC in total for the whole month. If that trend held, it would represent something like a 94% drop in their monthly buying volume compared to the previous month.
Wow, 94% decline. Why the change in strategy?
It likely comes down to their stock premium, their MNAV, that's the multiple of their stock price compared to the value of the Bitcoin they hold it, slipped a bit, dropped from around 1.32x down to 1.21x.
So the market was valuing their stock slightly less relative to their Bitcoin.
Precisely, which makes it less attractive for them to issue new stock to buy more Bitcoin. They want to get the most BTC bang for their stock buck, so to speak. When the premium shrinks, they tap the brakes on stock issuance and use other cash flows, resulting in smaller buys. It shows discipline, Even the biggest believers aren't just blindly buying at any price.
Interesting. Bit of strategic patience there.
Okay.
Now, for the complete opposite end of the spectrum, let's talk meme coins. Specifically, the return of the Floki CEO effect.
Ah, yes. You can't talk about crypto markets without touching on the often bizarre influence of social media and memes. This is classic. Elon Musk, owner of X, posts an AI-generated video
of his dog.
Of his Shiba Inu, Floki, joking that the dog is now the CEO of X.
Right, just a joke, presumably. But in the meme coin world.
That's rocket fuel. The Ethereum-based meme coin named Floki, F-L-O-E-I, just surged almost 27% in a single day. Its price jumped to 0.00000086, pushing its market cap up towards $829 million.
Nearly $1 billion in value, spiking because of a dog meme.
Pretty much. Now, it wasn't quite as explosive as back in 2023 when he first made a similar joke. That time it apparently jumped 146%. But still, 27% is a massive move triggered by a single post. The AI video element just adds a sort of 2025 twist to it.
And did people see this coming or react to it?
Oh, yeah. There was this pseudonymous trader, bonk guy, handled the Hunips, who immediately speculated Musk might go on another run of these Floki as CEO posts. His take was basically, time is a flat circle, meaning, here we go again, the same cycle of influence.
And did it spawn imitators?
Instantly. As soon as Musk posted, new tokens started popping up on those quick launch platforms like Pump.fun. One called Floki, CEO of X, ticker Floki, with the line over the O, apparently hit a decent market cap within hours.
It just shows the sheer speed and maybe irrationality of parts of this market, doesn't it?
Yeah.
You've got strategy meticulously calculating NAV premiums for multi-million-dollar buys, and then hundreds of millions can shift based on a billionaire's dog picture.
It's definitely a market of contrasts. Hashtag outro. So as we wrap up this deep dive into October 21st, 2025, we really come back to that core tension, don't we? The friction between centralized power, political or corporate, and the market's often volatile reaction. We saw that tension flare up geopolitically. Petro challenging the US, Trump's military rhetoric, the Sarkozy jailing, all pointing to cracks in the old order.
Right. And then the markets did something unexpected. They didn't run to gold. Gold actually cratered. Instead, Bitcoin surged past $114,000, fueled by this intense derivatives activity, this short squeeze, even while institutional ETF money was flowing out. It really suggests a potential shift in what some traders see as a safe haven or maybe a freedom asset during uncertain times.
But then, that same day delivered the sharp reminder of crypto's own Achilles heel, centralization. The AWS outage crippling major platforms just hammered home how reliant the supposedly decentralized world still is on a few massive centralized tech providers based in the US. It's a huge operational vulnerability.
It really is incredible how much happened, how many significant threads were pulled in just those 24 hours. The pace just feels relentless, and the old rule books for how politics affects markets, they seem to be getting rewritten on the fly.
Which leads us to our final thought for you to chew on. Thinking about that gold versus Bitcoin divergence and all the geopolitical noise, if gold, the classic store of value, is showing weakness under stress, and Bitcoin is rallying, maybe embodying that idea of freedom from central control, what does that mean for safety as global uncertainty keeps rising? With the arms race talk, the trade disputes. Which asset truly offers refuge or freedom when the systems themselves feel shaky?
And complicating that, how free is a digital asset if its access points depend entirely on centralized infrastructure like AWS? Is it physical risk versus digital risk? Political control versus corporate control? Definitely something to ponder.
Indeed. Well, thank you for joining us as we unpack the dense events of October 21st, 2025.
We covered a lot today, from tropical storm Melissa brewing to Sarkozy's sentence, the dynamics between Petro and Trump, the wild ride in Bitcoin and gold, strategies moves, and even Elon Musk's dog influencing markets.
And just one last reminder, if you found value in this discussion, your support really helps us keep these deep dives going.
You can use the PayPal link in the description or the Bitcoin QR code on the cover art to contribute. Every little bit helps us maintain the quality and research.
And of course, if you're interested in advertising with us, please reach out via the email address provided. It's another great way to support the show.
Thank you again for listening.
Goodbye for now.